the supply that miners are mining right now is just really not relevant anymore. But this was basically establishing back then the 4-year cycle. It remains as this psychological relic, apparently, that market participants lean into. And according to cycle theory, there's potentially 4 more months. So it points towards October for a potential bottom.
Welcome to the Verified Podcast by Bitcoin Swiss. None of the discussed is financial advice, of course. It's all for informational and entertainment purposes only. So sit back, relax, and let's dive in.
Welcome everybody to our new format, which will be kind of a shot of research content for you. Basically, every bi-monthly roll-up from now on will be accompanied by this internal verified, which will be more brief, a little bit sharper, and just very dense in terms of information. So what we do today is basically we go through our recurring contents within the industry roll-up. If you're not familiar yet with the format, please subscribe. It's our bi-monthly flagship publication. And as roll-up already states, it basically contains everything that you can imagine, from cross-asset coverage to pure vanilla crypto native coverage. So today I'm joined by our crypto protocol expert, Wolfgang, our OG technical expert in all sorts of crypto topics, and then also Filippo, who recently joined the research team as a senior research associate. So this is the roster that you're dealing with today. And basically from a content flow, we start with, we will have these recurring themes. We are starting with kind of the market mood and the tactical setup that we observe, kind of what do we expect in the next couple of weeks and months to play out in terms of market dynamics. We follow this up with a macro part where we check the current recent macro developments and how they influence, obviously, crypto markets that are still mostly running as a risk-on asset class. And then in the third and probably largest part, we will digest some of the recent crypto native topics, this time mostly centering around Ethereum. And then lastly, we have this, let's say, funny section that we call long, short, or delete, where each of us picks something that we want to long or short, or maybe even delete from the timeline completely. So we start with the current market mood. I think one of the most outstanding metrics were the recent ETF flows, strongest outflow month since spot ETF inception in the US. I think there was an outflow of $4.5 billion compared to the follow-up. It was 3.5, I think, last year, November. So this is a strong marginal, not only marginal increase, it's a big increase in outflows. And alongside, I think price performance in June was also minus roughly 20% in Bitcoin. So these outflows definitely have a mark on the price performance as well. And alongside, obviously, we know our famous Bitcoin player within the DAT space also started selling some Bitcoin. I think more than 3,000 Bitcoin were sold by Michael Saylor and Strategy to fund their stretch dividends. What is your guys' take on these recent flows, and also DATs now becoming no unconditional buyer anymore, but also a seller that we didn't have on the radar so far, at least from Strategy?
I mean, I think he said never sell your Bitcoin, right? Like he didn't say he would never sell Bitcoin. But I'm not sure about that. What I think is that it's really, in general, this is positive in the sense that it removes some uncertainty. We always had this question like, what would Saylor and what would Strategy do in different kinds of situations? And now we know that, yes, it's possible to sell Bitcoin when needed to maybe save, stretch, or, restructure a little bit the different instruments. So in general, I think it's positive that we have more data and more insights on how Strategy will behave, and it's definitely important for Bitcoin and Bitcoin price action. I think Ethereum DATs behaved differently as they're still buying. Is that the case? I'm not sure.
Yeah, they do.
Yeah,
I think an interesting,
the
let's say,
timing.
chemistry of the last couple of months where BitMine, I felt they were waiting for any strategy announcement, and then they immediately followed up with how much ETH they bought. And yes, I think they continued to be like solely positive on flows, and they just bought like after strategy sold this big chunk of BTC. They immediately announced that they bought a couple of 10,000s in the 10,000 range again of ETH. So this is quite impressive, and also the fact I don't know if they launched their stretch kind of analog vehicle that they want to fund with ETH staking rewards yet, but I think that might be an interesting instrument as well. And to your point, Wolfgang, I thought it was quite interesting to see on how the market reacted to the sell news of strategy, because we had a brief dump, but then it basically recovered more than it dumped before, strongly indicating that the market was very uncertain and used this basically announcement to kind of relieve rally briefly. So it wasn't really about the sell. It was kind of a pump after news. And they only also sold, I think, 0.4% of their holdings, so it's not a huge deal.
Yes, I agree. The first sale was more important from a symbolic point of view. Just 32 Bitcoin.
Yeah.
That was the big news, I would say.
I think one of the big outliers in terms of institutional flows was Hyperliquid. They managed to keep their entire flows, I think, quite positive. They added more than 100 million in positive flows, ETF flows in June. And overall, I think they now have, since the launch of Hyperliquid ETFs, now 300 million in net inflows, alongside the assistance fund kept buying. So there's really even stronger like demand for Hyperliquid, and I think their fundamentals did not really change. So do you guys think Hyperliquid continues to be one of the more obvious plays in crypto right now?
I mean, definitely, like, I think it's good to see these positive flows when everything else kind of had a negative net flows. But it's also maybe important to see like how centralized or which entities are contributing to these buys, right? If it's just maybe one or two entities that are contributing the most. Although like even like for Bitcoin and Ethereum is not that, but definitely you have more DATs and you have more ETFs products for BTC and ETH than for Hype. But yeah, might be kind of cautionary a little bit on this outlook.
Yeah,
I mean, in general, yes. I guess we probably need to wait a little bit more to see if these flows are sustained. But in general, this is another step in the right direction in the success of Hyperliquid that seems to do everything right, honestly, since they started. And success, yeah, you used the word obvious, right? Yes, they make it look obvious at this point. They make it look easy. And when something is too obvious, then in too much consensus, then maybe it's also, you need to start asking yourself some questions. But they are doing everything right. And we have seen competitors rising lighter. Of course, it's important to follow. And they also implemented a burning mechanism related to revenues and adoption. So yes, I will definitely have a look at that as well. And the revenue meta, yes. Why should it even be a meta? In retrospect, obviously you want tokens to be related to, real demand, actual, adoption and demand. People need something, they're willing to pay for it, and part of this value to be great if it is accrued by the token. Of course, we have been in a regulatory environment that was more hostile or at least unclear to on how to do this with tokens, but we have to move there at some point in some way. And yeah, I see. Maybe you can introduce the revenue dashboard.
Yeah,
Head
sure. I mean,
Research.
it segues perfectly. In this edition, for the more frequent readers, you might have seen that we launched a new, let's say, a new flavor within our industry rollup. We call it a revenue dashboard, because we continue to believe that, revenue meta, or this whole narrative around revenue, becomes more and more important. Basically, the same dynamics that we observe in traditional markets, especially within the equity sector. That's why we introduced this new feature within the industry rollup. I think it's a good timing. We are not too late yet. And we do also see some pockets of outperformance, some selective outperformance of some crypto assets compared to, if you benchmark it to Bitcoin. And most of these tokens usually come with very strong revenue metrics and so forth. So our view is basically within Bitcoin Swiss that, yes, we have some special cookies within the crypto industry that come with monetary premium and more pristine collateral features, rightfully so. Just to name a few of the obvious large caps, Bitcoin and ETH. And we continue to believe that you should not value them solely on discounted cash flow models or similar. But there are other tokens out there that do not come with these, let's say, less tangible properties and need to lean more into this revenue area. And therefore, if you combine this basically with the adoption we see, we cross the mainstream into mainstream relevance with different primitives such as prediction markets and so forth. We have better regulatory tailwinds right now. If you think about the Clarity Act and so forth, we have a more pro-crypto regulation overall in the US with the SEC, CFTC, also launching classification frameworks and so forth, and very deep institutional rails that are even deepening. So in our view, it's very important to increase this tracking or monitoring revenue, and therefore I think it's the right time to introduce this dashboard. I don't know, Filippo, what do you think? I guess you agree with that view, right?
Definitely, like it's good to group different projects by categories and track the performance of this. Definitely, we've seen already that makes already much sense, but it's also important and interesting to see how it evolves with time, as there might be some cyclical or recurrent sector that stay on the top, and maybe some other sectors that might pop up sporadically. And definitely it also highlight the importance of taxonomy, crypto taxonomy, that we are building at Bitcoin Swiss, and I think it's a good use and a highly valuable tool, definitely.
So let's quickly discuss the tactical setup that we observe right now, because everybody wants to know, is it bottom in or not? And then follow up with some discussion around Ethereum, because apparently, despite this weak price action, Ethereum continues to ship a lot, is preparing a lot in terms of roadmap and so forth. So what we see right now in terms of cycle pattern, it's very clear that for now, there's still this 4-year ghost is still chasing us, despite the underlying supply fundamentals are not really in place anymore, meaning institutional flows are more in the driver's seat than any miner supply coming to the market, since the supply that miners are mining right now is just really not relevant anymore. But this was basically establishing back then the 4-year cycle. But apparently the market, it remains as this psychological relic, apparently, that market participants lean into. So for now, we quite follow this cycle in a similar fashion. And according to cycle theory, there's potentially 4 more months. So it points towards October for a potential bottom. So I guess our take is it's possible that it takes another 4 months, especially given the seasonality during summer, where we usually deal with this summer lull, very weak trading days. So I think it's reasonable to expect October, but given the new market structure of Bitcoin, it's also possible to see a shorter cycle. In a similar fashion, I think it's interesting if you check different resistance clusters and support clusters. Right now, we are trading in this battleground zone between roughly 83K and 53K, which is the downside guardrail, basically by the realized price. And upside, in our view, we just need to reclaim these important cost basis levels of ETF buyers, which sits at 83K in order to reverse the trend. We are observing, like internally, for also our internal analytics, a lot of different cycle indicators, potential bottom indicators, among them the RSI. We also have a new bottom indicator framework. Maybe, Filippo, you want to guide us through it?
Yes, sure. Yeah, we did. We put together some basic indicators that are BTC specific. There are some indicators that are very popular. We have the Puel multiple. We have realized P&L, 200 weekly moving average. So it's interesting to see that of these 12 indicators in the previous bear markets, basically around 9, 10 indicator were basically flagged and were active. And the path to get there was kind of not fast, right? We have seen like some months before actually reaching these like 9, 10 indicators that were active. And the pattern is not that they are all active at the same time, but some are flagged sooner, some are flagged later. But in the really, really deep bear market for prolonged days, there were kind of 9, 8, 9 indicators always active. Maybe not always the same, but always active. And currently we are around 5, 6 indicators. There was a brief period where we have 7 of them, but definitely this might indicate that definitely the bottom is not in. We crossed the 200 weekly moving average briefly, and then we went up again this week and trying to test. But in my opinion, if we look at the previous bear market, it might be that we might go below this average for some time. In the worst case scenario, probably. Definitely, we didn't see any black swan event like the previous bear market. If you remember Terra Luna implosion, FTX, and all this like really bad kind of moments that definitely created a lot of fear. Still, this during this bear market was definitely not happening stuff like that, not in that severity, I think. So it might be that if we don't have this kind of bad events, we might have a shallower bear market as well, which might be good. And then again, as Dominic also said, right, the underlying structure definitely changed a lot. We have DATs, we have ETFs that basically removed, I think, 10% of BTC supplies from spot market. I think it's also important to mention. And also the fact that we have more institutions, and also the miners are playing a a lesser role. So they were probably steering a lot in the early cycles, but now it's definitely like not the case anymore. And I think it's something to really also look at, right? Yeah.
I think what's interesting in terms of the bottom line here, in terms of performance, is that we did see somewhat diminishing returns, and now it's reasonable to expect a more shallow drawdown as well. So we might not drop reasonably below like 60% from previous cycle peak, and we went there almost, I think. So yeah, if the next couple months play out to be more range bound, it's reasonable to expect that the downside is not super high anymore. It might make sense already to start building some exposure, as the asymmetry, especially compared to other markets, is quite high. I think what's also interesting is if you check our the two models we run for our client exclusive report, the Observer. It's more they are usually more short term positioned, but both are right now deployed, so are kind of in the market. They have exposure despite an overall more bearish trend, but it's always quite a strong signal if both models that operate on different time frames agree with each other. So this is definitely something worth monitoring. Before we dive into the Ethereum more technical part, last thing I wanted to, or I think worth mentioning, is the current macro situation did not really change a lot. We are still in this tug of war, basically, between what happens on the geopolitical front, how sticky inflation is, even though like oil price basically eased quite a lot since the recent ceasefire. We observed that the 10-year yield is rising, which basically implies that the market is still pricing in more persistent inflation and uncertainty. So this is something to have in mind. And then also the recent appointment of the new Fed chair, Kevin Walsh, is also bringing a little bit more volatility, because he will apparently lean less into forward guidance, and thus economic data releases will become more important for the markets to position themselves, which implies that it's reasonable to expect more volatility alongside. I guess for now, it's, if we check Ethereum, what happens, I think what really stands out, and what we covered in the roll-up as well, is that we finally broke this old trade-off where basically fees went up as activity spiked. What we see right now is basically all-time highs in transactions, in TPS, in the amount of transactions, while having almost all-time lows in transaction fees. So mainstream becomes attractive again. Maybe there's kind of this move back to let's do our business, not mainstream. Mainnet is becoming attractive again. So it seems like many on-chain citizens move back to Ethereum mainnet to do their DeFi operations or what else. And I think a lot of this is basically stemming from the almost flawless execution in terms of the Ethereum roadmap, the recent upgrades that weren't really this big in terms of price impact. It just happens nowadays. A couple of years ago, this was always quite big and usually went alongside a lot of volatility. And then we had also Vitalik Buterin recently sharing the new Ethereum roadmap. And here, obviously, Wolfgang comes in as the big expert at Bitcoin Swiss in terms of the next upgrades, what we should watch out for, and what does this new roadmap actually mean?
Right. So yeah, what we know what we can expect in the near term, relatively short term, is the Glamsterdam upgrade, Glaus Amsterdam. And with that, we get enshrined proposed their builder separation, EPBS, and block level access lists, BAL. Now, without going too much into details, the thing is, what this enables is scalability. Scalability without, just asking to, increase hardware requirements. Scalability enabled by a more efficient way to do things, pretty much. And the thing is, indeed, Ethereum is scaling so much. We said that in the outlook last year, Ethereum is going to scale exponentially. That was the plan, and our belief was that Ethereum was actually going to pull it off. The idea is to increase gas limits at least 3x every year until the end of what you see here, the straw map of Ethereum. So they call it straw map, not roadmap. It's flexible and it's open to contributions from everywhere. Of course, it's not only the EF. We have other nodes. We have the newly founded ETH Labs. We have client teams. We have independent contributors. And I've seen this straw map changing dynamically. So what happened recently, because by the way, this is not really new. You might remember the Beam Chain announcement. That was like a very long term. It was seen as too much long term. But actually, when you see how much stuff needs to be done, it's not really that much long term. And what changed recently? There are some important changes and also a post from Vitalik, who is basically giving another name to this roadmap or straw map. We had the Beam Chain, we have lean Ethereum, we have very lean Ethereum, but also Ethereum 3.0 was symbolically mentioned by Vitalik. And it kind of makes sense. We had Ethereum Genesis in 2015, we had Ethereum 2.0 that was the merge in 2022, and after 7 years, again, 2029, we will have something that can be called Ethereum 3.0 because basically everything will be replaced. So, there is criticism on Ethereum on how there is too much technical debt compared to new projects that learned from the, as we can say, mistakes or anyway, early design choices that turned out to be suboptimal. And all of this will be replaced in Ethereum 3.0 or anyway at the end of this roadmap. There are some things I like to mention that, that maybe as known as others. One is focus on privacy. So you want to have native privacy at layer 1 level. So not opt-in privacy, it's privacy at layer 1. Then, we are talking about snarkification of everything. But yes, we're going to get there with post-quantum starks for recursive proof of aggregation and basically prevent. You don't need nodes to re-execute everything. We will have scalability. Yes.
This is huge, right? In terms of gas limits, because there will be so much more time that nodes can actually use to package stuff, right? And not to verify everything.
Yes. But, none of this is easy when at the same time you have to preserve the crops property of Ethereum. So censorship resistance, privacy, security. And the question is who's doing the proving, right? Because if normal nodes will just verify who's doing the proving, how to ensure that the provers are properly incentivized and so on. So many questions. But yes, Ethereum is going there. So I mentioned verification through zero knowledge proof. I mentioned privacy. I want to mention focus on formal verification. So you want to have a state transition function that is fully, secured by formal verification. We want to have a new, there is again talk on reducing the issuance, or at least changing the issuance curve of Ethereum, of Ether. There is another big debate. This is what they call here snail issuance. And the other recent change from the last 2 weeks for this update is increased priority on post-quantum upgrades. So I think Ethereum already had an aggressive timeline to do the full migration by 2029. Now we see it 2028 to 2029. Because there is urgency, clearly, not panic, but urgency. And it was explicitly mentioned that Ethereum must go faster in doing the migration to post-quantum cryptography and consensus execution and everything. There are rumors on how the EF might know a little bit more than what is disclosed in public. These rumors are not baseless, like you have seen the Ethereum Foundation among co-authors in the Google paper in March that made waves everywhere, also outside blockchain, of course. And even just with the public information that we have, things are moving in the quantum point of view. Just news of today, Oratomic raised $300 million in their Series A, which, I guess it's important. You will need money to build a CRQC. So,
Interesting.
What else? From Ethereum, I would also mention another recent development is that not only we will scale in a way that makes sense. So through efficiency and in a way that is still secure, you are not going to blow up the state growth, but there are other ways to bring execution back to the layer one. What is really interesting to me these days or these weeks is the rise of prop AMMs on EVM and on Ethereum layer one specifically. So you see prop AMM and market makers basically talking directly to the builders or updating directly their quotes with the builders implementing application controlled execution. And suddenly you're not anymore limited by this 12 seconds block time that, by the way, is going down. Another big thing is the fast finality that we'll have by the end of this Stroma. But already today, with the 12 seconds time, you can have tighter spreads and best execution directly on Ethereum layer one, with all the advantages that you have in liquidity and security and so on. So definitely interesting developments. I don't know how the investor or in general, how it looks for Ether, the asset. At the same time, I mentioned the issuance, the reduced issuance. Ether is not done. They didn't give up on the monetary premium at all. I would just say regarding issuance, because I mentioned it, there is this project or idea or attempt, push to reduce how much Ether we are issuing and distributing for cryptoeconomic security, for incentives. This is a long-standing effort, but the idea is that, yes, we are overpaying for security and the current curve is not sustainable because eventually it will lead to all Ether being staked or almost all Ether being staked, or more precisely, liquid staked. And then we replace Ether as money with some liquid staked Ether, which is not ideal for the moneyless story, right? So this is coming back and is back here on the Stroma with this box on the snail issuance. I don't know how optimistic I am on this ever working, because contrary to some belief, Ethereum development is not as centralized as some people might believe. So there was already this attempt, it didn't work. I don't know how you see it, but anyway, it's not something planned for the next two hard forks. It will be later. Next forks is scalability, Glamsterdam, and censorship resistance with Fossil, with the Hagota right after.
So more crop support.
Yes.
That's good. Good to see that they don't trade off on their initial very important values.
Yeah, the EF does not compromise on crops.
Yeah.
We have this new development or R&D lab company, ETH Labs, that is not like they are anti-crops, but they also have other priorities related to adoption, related to UX, and so on. So we have these previous researchers from the Ethereum Foundation that, remember, they left and people were concerned, like, what's going on? But it turns out that they're still working on Ethereum, just from a different node.
Yes, and maybe with a different perspective or target, which is good to see. So
I think it's good.
still many people taking care of the network and how it develops and how it will be positioned in the upcoming years. I thought it's cool to keep this at the 30-minute level, but let's try to close with this new feature, like very quickly, each of us maybe shares one thing that we would long, short, or even would even delete from the timeline. So it doesn't need to be an asset. It can also be a topic that you're constructive on, or vice versa. On the long side, something that kept me busy recently was this heat wave that we endured. And I checked some like new data and research, and apparently like climate change seems to be like accelerating. At least there's some evidence for it. And there's this cool chart where you see across these years, you have this spiral coming up, and it shows the degree temperature in Celsius, and it tends to go further up. So meaning it's getting steeper, the annual increase in temperature in heat records and so forth. And I checked, and maybe at some point it might have an impact on different crop areas again. So maybe it's cool to, at some point, maybe timing is difficult, but you might want to long wheat volatility, I thought might be a cool idea, because also nobody is talking about climate change right now, I think. And maybe it's just another narrative just manifesting in the next couple of months, because we always need something where people are concerned about, I feel. And then what I would short, but it's very dangerous, is all of these tokens that are like highly manipulated, where you have this low token supply being circulating, but it's basically cornered by people being able to manipulate it. A lot of people try to short it at insane funding rates. If you think about Rave DAO, for instance, just to name one, to have one sample. So this is something I would love to short, but do not recommend, obviously, because funding rates are so crazy and it's like highly manipulated. I don't know what I would delete from the timeline. I think this whole topic about Michael Saylor selling is a little bit overblown. I don't think it will have a huge market impact anyway. I don't think it's a super big story, but the market blows it up a little bit more than it actually is, in my view.
Yeah, I'm also not a fan of that at all. I would say my timeline works pretty well. You know, when you insist on, I'm not interested in this topic, eventually it works. I would
Good
also
filter bubble then.
yeah. I would also not delete, but I'm tired, but then I keep following. So it's almost like a guilty pleasure to read these bad takes. Longing, I don't know. To be clear with the audience, I'm not an active trader. I do like one trade a year. I just think that Ethereum is underrated and Solana is so underrated. It's given for that. That doesn't mean that it's a good idea to long, but I think Solana has been given for that again too fast.
I will short the stock market, probably like even those stocks that are super hyped, like Micron or like SanDisk or these kind of crazy stocks. I would definitely long collectible assets, might not be on chain, like normal assets. I feel like there are already signs that people are like buying like assets that in very limited supply and kind of are in a trend. I don't know, like Pokemon cards or whatever. And then delete meme coins. I would delete all the meme coins if I could.
Yeah, but define meme coin, because people have different thresholds. People say anything that is not Bitcoin is a meme coin.
All the
so
junky
really
meme coins. You know, like
they're the most obvious,
I don't know.
the most blatant. cases.
Yeah.
That's something that also resonates with me. I'm fine doing that. That's good for the first episode. It was a lot of fun discussing with you guys. Until then, I would say we see each other in 2 months again after the September edition of Rollup, of the industry Rollup. Thanks for joining, Wolfgang and Filippo. It was a pleasure,
Thank you.
as always. And
Likewise.
take care, everybody.